recognition and some kudos and whatnot. Before we get to our main event, we got a lot of detail and interesting information today, as you all know, so I won't take too long here. But in particular, Melanie Bounds, 15 years with us. So that's coming up just a couple days, but wanted to recognize this. It's been great having Melanie here this whole time, and I've got all sorts of memories with her from back in the day. So that's always been fun, and congratulations, Melanie. We're happy to have you here, and here's to 15 more.
Hey, Mike, your slide's not switching. Still have the title.
How about now?
Nope. Still just showing the Remax. There you go. Well, that's got the
yeah. All right, we're going to do it this way.
There you go. Perfect.
All right. Okay, so other kudos. Again, this is from our peer reputation folks, so other agents out there giving you guys reviews. I just wanted to point out a couple that I thought were particularly good here. So we've got Steve Padilla, easy to work with, great communication, and his team was on top of the transaction the whole time. That's always a good thing. Good job, Steve. And Janet, of course. Barb Henderson, Barb was amazing every step of the way. Simple to the point, but nice job there, Barb. James and Amy. James is an excellent agent to work with, professional, great communicator, and even in this crazy market was looking for a win-win for both buyer and seller. Again, that's a good thing. It pays to be nice out there. Manny West, good communication, friendly, solves issues and problems in a positive, proactive manner. Brady Bosworth. Brady lived up to the professional's name. Always like to see that. Had some bumps in the road, but happy buyer and seller in the end, and a smiley face. Nice job, Brady. And then I love this one. This was from Lynette to Janet, so inside the company here. But again, I love it. It's love Team Clayton. This is the first transaction I've had with someone in my office, and it went as well as expected. We seem to have the most stand-up quality people working in our RE/MAX Professionals office, and Tom Clayton and team are quality people who care about their client and professional to work with. Looking forward to working together again. I think that pretty much says it all. That's what I love to see and hear, and I feel the same way, right? I mean, there's a reason that we're RE/MAX professionals, and you guys do exemplify that. And honestly, being here at meetings like this today is one of those reasons why. So again, just all the love to you guys. You guys are fantastic and professional, and things like this prove it. Yeah, this is like, inner office, but still we get so many other things coming in from other agents out there. And again, it's pretty much a common theme here. So well done on that. And of course, that positivity does lead to productivity. So I thought I'd just quickly share this here. As you guys know, we track our market performance against various other companies and competitors each month. We started doing that like on a more granular monthly basis back when the pandemic started, just to kind of see, hey, this market's crazy. We don't know exactly what's happening, but we want to see really how we're reacting versus everyone else out there. So we've continued to do that. This is actually showing year to date, so basically through September. And the red line there, that's RE/MAX Professionals. The next line next to that, that's an aggregate of all the RE/MAXs out there. So you can see both of those bars are well above everyone else. But if you compare us to the first actual competitor, which is Russ Lyon, as far as like transactions per agent, we actually are more than double them. So, they're at like 5.82 or something like that, and we're like 12.3, and again, year to date. And, you can see the other folks on there, but I don't think I need to say much more than that visual, but you guys are doing an amazing job. And again, just staying on top of that market, doing those right things, and continuing to outperform everyone. And again, talking about that productivity, we wanted to give just a quick congrats to like how far people have come again, just year to date. We still have a quarter left. So we got 33 people here that are at the executive club level. So that's amazing. We've got, again, another 33 people that are at 100%. And one thing in particular I want to point out is a number of people having their best production years ever this year, which is, fantastic to see. Like just glancing at the screen, I know Monique just broke into here to 100% for the first time just in the last, I think maybe 2 weeks or so here. So that's amazing. In fact, a couple of folks on here, I believe, just kicked up to the next level or are about to with their next commission. So that is fantastic as well. And then Platinum Club, I mean, 10 folks already in Platinum, fantastic there. And our much higher production tiers as well, Chairman, Titan, and Diamond. Linda, congratulations. I mean, it's your first time up in that Titan territory. And again, that's fantastic. So again, just a huge kudos to all of you. And again, a quarter left. So let's see how high we can fly. Along those same lines, as I mentioned, a lot of people having their best years ever. If you are having a little bit of a challenge, grinding out the rest of this year, or if you just want to position yourself properly for next year, we've got a lot of business planning stuff going on. Sarah is running an entire series of these throughout October. So it's on Tuesdays. We've already had a couple of those, but easy to catch up there. You're not behind. So if you haven't joined those, you can still do those preliminary things and jump in. But this is very granular, very detailed, and it'll really help you get positioned in the right direction. So jump in on those Tuesday classes if you can. Also, we're going to be doing another one of our business planning workshops. It's a little bit more intensive, so look for that in the near future. And as always, we're all happy just to sit down and chat with you one-on-one. I know, Nate, you put that out there pretty recently too, just a general ask to anyone that wants to spend a little time with you and really go super strategic and deep. Again, Nate's always happy to do that too. So if there's anything we can do to get you in the right direction, or even if you're happy with where you're at, if you are having your best production year ever, but you don't want to totally take your foot off the gas and kind of go the other direction next year, again, let us know. We're happy to help strategize on all those things, and again, in very practical and tactical ways, things like that marketing. I'm sure that's a big part of Linda's fantastic year here that I just mentioned. So again, please talk to us. We're always happy, and it's just our pleasure to help. Along those same lines, quick reminder, since we got so many people here, especially as we're going into the winter holidays and whatnot, our field services team is great. We got a whole set of our licensed folks here that have put their hand up and said that they're willing to help, just kind of on an a la carte basis. So, if you've got something going on, you need someone to run out and do a showing for you, or prep an open house, or, add or remove a lockbox, all those kind of things, you can just email fieldservices@rmxprofessionals.com, let folks know what you need, and someone will jump in with you and help you out with that. So again, just a great way to help really leverage yourself and make the most of your time. So definitely keep that in mind. If you haven't used them before, give them a try. And likewise, hope you all are very much aware that we've got some fantastic transaction coordinators here. So again, that's just a real great force multiplier for you, really. Allows them to do what they're best at with keeping the paperwork side and some of those minutia in line and where they should be, and let you spend even more of your time doing what you do best, the marketing, the client interaction, all those kind of things. So again, if you have any need for that, or again, if you're not sure if you do, you want to give them a try, jump in, throw one transaction out there, see how it goes, see what they can really do for you. And that way, when you feel like you really do need it, what's there. One more quick thing here. I know it's a little ways out, but since we didn't have our official meeting last month, instead we had our anniversary and reunion celebration. If anyone somehow missed everything we put out there, we just want to give another giant kudos and a huge heartfelt thank you to y'all for letting us get to our best month of miracles total so far. That was $22,095. So again, best take for a single month of miracles month that we've had so far. We're going to just keep, breaking that record every year here. But again, a huge thank you to you. As Nate was saying at the beginning here before the meeting, there's so much that Phoenix Children's Hospital and Children's Miracle Network in general are doing and expanding and all that. And it's efforts like these that really allow them to do that and serve a lot more children. And as we heard, even some adults that are in need and really need that specialized care. So thank you all for that. And then just a couple quick reminders here. So RE/MAX University, if you guys have not checked out RE/MAX University via Max Center recently, I'm going to say do so next week. Next week, they're launching the new RU, fully recoded, reinvented. It's much more streamlined. We've got a lot of fresh content up there. I've kind of weeded out some of the things that are kind of legacy, maybe no longer as applicable as they used to be. So that's a good thing to see. But also the content that's in there, it's been changed up in a number of different ways. One of the things I'll mention in particular, which I think is maybe best for how we're all living and surviving these days, is even the longer form content. There are a lot of full classes. You can still do designations through there and all that. But if they've got something that's let's say an hour and a half of content, what they've done is they've basically gone in and broken it up into, chapters and segments and whatnot, so you can jump right to the specific piece that you want. Or if you're going to go through the entire thing, you can do it in, like 7 to 15 minute kind of segments, and it's going to remember your progress and like all those kind of things, of course. But that just makes it really easy to actually, consume that kind of stuff, even if you don't necessarily have that big a block of time to carve out for it. Plus an updated app, so that again, you can do that on the go. If you want to do one of those where you're, in line waiting to pick up the kids at school or what have you. Again, they just make it really easy for all those kind of things. And I think, as we all know, and hopefully have all internalized at this point, the more you learn, the more you earn. And as you can see down there at the bottom, they have a few stats they've looked at really deeply there. Folks that are really engaged with RU, both in just the general class content as well as some of those certifications, other things that are offered. Folks that are in there, they've got that learning-based mindset. Again, they're closing between 29 and 38% more transactions, and earning somewhere from a third to over 200% more than the folks that aren't in there and continuing to educate themselves. So check out the new RU next week. That's all I'll say on it for the time being, but you'll see more from RE/MAX LLC as well coming through your email, so check that out. And then last thing, 15th annual pumpkin carving contest. So these are always so much fun, and thankfully this year we can be a little bit more normal with it as far as the layout and whatnot. So we're really excited about that. But that's coming up on Friday, October 29th, out at Surprise as usual. So really excited. We got a few teams registered already, I believe. We want to see some more. We want to see what kind of creativity you guys have. And again, we're sending out additional information on that, but mark that on your calendar. Even if you're not coming out there as a team or doing some carving and decorating yourself, it's still always a good time to see what other people have done. Usually we've got a lot of folks dressing up as well to coordinate with their theme and that kind of thing. But regardless, it's always a fun time. So join us out there for that. And with that, we're going to go ahead and jump on over to our main event. And I'm going to let Shannon jump in here and do our introductions and get us started.
Good morning, everybody. I just want to take a second and just say thank you so much for everybody coming today. I know, it's hard to take time out of your days and you're all very busy. So I appreciate you all being here and making this a priority. It's an important one every year. And when I joke about that afterwards, I always consider pizza delivery as a new career, but that's okay. But it's all the things we can learn from. So today we have Lisa Robinson. For those who don't know, she is the owner and president of Pinnacle Insurance Consultants. She is our insurance representative for our E&O errors and omissions insurance, our general liability, and a couple different policies, cyber, a couple of different ones that we carry. So we're lucky to have her here. She has her pulse on what's happening with claims and things she's seeing come through in real estate challenges that are hitting her world. We also have Michael Orcutt, who is our legal counsel. He is a partner with Lipson Nielsen. He specializes in real estate law and professional liability. And I just have to tell you, he's a huge, huge help to me. Anytime we run into some sticky situations that I'm just not sure where to go or how to handle, he has always been really great at helping me think through situations and giving great advice. So we appreciate him very much, and Lisa as well. So with that, I will let Lisa start, and they're going to be telling us what they're seeing in claims and issues out in the real estate world.
Yeah, it's hi everybody. Shannon, thank you. It is great to see you guys, and I'm excited to be here with you this morning. Unfortunately, it's not in person, but it's great to see all you guys. My gosh, I love the kudos. What you guys are doing over there is amazing. Kudos are great because happy clients are less claims. So we always talk about, staying on that side, and you've got a lot of that going on. And,
Right.
And I also want to commend you guys on just, first of all, Shannon does a phenomenal job. It's really awesome working with her and how in touch and in tune that she is on everything and helping you guys solve issues. And that's really critical, is being proactive in resolving issues. And you guys have done, we're going to talk about what I'm seeing and how volatile claims are right now. And you guys have just done a phenomenal job. So that's because of what you guys are doing out there. So you know, hopefully we walk away today not you know, wanting to go deliver pizzas, I think you said, Shannon. But just knowing that you guys are at the top of your game and you do a phenomenal job. And it's because how many years I've been coming, you know, you guys do this, we've been doing this a lot of years, and it just keeps you, I think you're probably, you know, in the 1% of people that are, you know what's going on and staying on top of things and, you know, dealing with the issues and doing it right. So I'm really thrilled to be a part of being able to help you guys with your success. So with that, I wanted to share, as Shannon said, what I'm seeing and you know, when working with Michael Orcutt and, you know, kind of what's going on in our world. Unfortunately, I guess it's the ugly side, the dark side, but it's a reality nonetheless that we need to deal with. So starting off, just I want to give an update nationally what we're seeing with the NAR endorsed E&O program. It's always, you know, I'm always saying, okay, what's on your radar screen? And it's really interesting. The NAR program is administered by Victor, and they just have a wealth of knowledge of information. So what they're seeing nationally, claims are up in 2021 versus 2020. Obviously, we have more home sales transactions, so we're going to see more claims. Nothing outside of the norm right now. 3 most common claims: negligence, misrepresentation, fraud. 71% of the reported claims to the NAR program is from detached residential homes. They are absolutely expecting to see claims increase much more once this crazy market cools down from all the waiving of contingencies and inspections. I think we probably all know that's coming. The number 1 cause of loss continues to be the constant year after year after year, which is non-disclosure of property condition. The top 3 property condition claims that result in litigation: mold, water intrusion, so issues with prior water leaks, flooding, and mold, roof issues, and sewer septic issues. And I know I was talking with Michael yesterday, Michael Orcutt, that's on his radar screen too. He asked me about that. I'm like, yeah, that's on my list, where, you know, it's properties represented to be on sewer when it's actually on septic and the septic fails. Michael, did you want to jump in? Feel free to jump in and kind of add what you're seeing in your world.
Yeah, absolutely. So the other thing we're seeing, there's the sewer septic discrepancy, where a property is listed as being connected to sewer, and in fact it's septic, and that happens all the time, frankly. We probably have a claim like that in our office at least once or twice a year. And you can't make assumptions there. I live in North Central Phoenix, and there are properties in my neighborhood where, you know, 9 out of 10 homes on the street will be connected to sewer. And if you drive by, you see the manhole covers, and the assumption is, okay, everybody's connected to sewer. When those houses were built, it was an option with the builder. You could pay a sewer connection fee, or you could pay for a septic system. And so every once in a while you run across a house that is on a septic. And so that happens. You can't make assumptions there. The other issue that we're seeing a lot of is simply failing sewer drain lines. And I'm aware of some buyers agents in my area that are actually paying for sewer line scopes on behalf of their buyer clients. Because a lot of the houses where I live are 50, 60, 70 years old. And it's a matter of time before those sewer and drain lines fail. And I don't think anything pisses off a buyer anything more than closing escrow, having a bunch of people over for Thanksgiving or the holidays, and having their sewer line completely fail. We see, you know, at least a half a dozen claims based on the sewer line. So if getting an echo. So my recommendation there, in this kills 2 birds with 1 stone: sewer and septic issues. If you're representing a buyer and the property is older than 10 or 15 years, recommend in writing that they hire a plumbing inspector to scope the line that verifies sewer versus septic, and also verifies the condition. And absolutely, that should be in any time you're representing a buyer, make that put that in writing. If the property's older, you may even want to consider paying for that as part of your commission. I think that if you do that on a regular basis, you could probably negotiate a pretty good deal with a plumbing contractor. But that is probably the single biggest claim that we're seeing from a volume standpoint are sewer septic connection issues and then sewer drain line failures.
And just to piggyback on that, you guys, we have 2 active situations similar to this right now in our company. We had one just last year, Nate, I think it was, but we have 2 that are going on right now in those exact scenarios where was thought to be on sewer. It ends up being on septic, the septic fails or backs up, and that, you know, that's when they find out they're on septic. And of course, no one's happy at those moments. So it's really important, you guys, to be really careful with that.
And if I can add to that, Shannon, briefly, you know, it's oftentimes not just an easy, quick fix. You know, some buyers may say, well, you know, if the sewer line is going to fail, you know, that just means they trench a little hole in the front yard and they put a new piece of pipe in there. In some cases, if it's a septic system that fails, whatever jurisdiction the property is in may not allow you to put a new septic or replace it. They may require you or the property owner to connect to sewer. And depending on how far you are, that could be hugely expensive. And in other cases, when we have drain line failures, it's not just the drain line on the exterior of the property. It could be replacement of all the underground plumbing, the drain lines in the house, which requires removing all the flooring, you know, saw cutting the concrete slab and replacing everything. And I've got a case right now where the cost of repair is about $80,000 to correct sewer drain lines.
If I can add real quick, we're in the middle of one right now. The sewer line is actually right in front of the house. The septic system failed. We're over $60,000 to connect, required by Phoenix to abandon the old septic system. This house was a cash purchase. Within minutes of it recording, we pulled the recording back because we found out the challenge. And good thing we did, or I'd be writing a big check myself to keep us out of court. But I mean, I think it's 62,000 was the bid, but you know, they're finishing it up this week. It's probably going to be above that. So, I mean, it's very important to understand what's going on here.
Okay, so the average cost of claims, the average cost of a claim for the NAR endorsed program, which is going to be your attorney's fees, that is gone up from 27,000 to 32,000. And the average paid loss, which is the attorney's fees and damages for the NAR, excluding license disputes, is $48,000. So our average cost of the claim is close to $50,000 now. Now, the real estate E&O market has experienced an overall tightening due to deteriorating loss experience over the last probably 4 years that I've witnessed. Because of the deteriorating loss experience, we have less carriers. We've had carriers that have pulled out of the market. They don't want to play in it. Less carriers, less competition, premiums go up, more rigid underwriting guidelines. Claims is a big driver on that. And also looking for insureds to have higher retentions, more skin in the game, you know, more something to lose if something goes wrong. So that's what NAR has, what's on their radar, nothing earth-shattering, which is good. E&O trending issues in my office that I'm seeing. One of my observations is I'm seeing issues that we really haven't seen in the past, which is interesting. I want to share those with you. First of all, agents buying their own property. All right. I mean, something that we've done, you know, year after year. Typically, we didn't see claims coming out of agents buying their own property. You see it when they sell it. But now we're seeing more claims from agents buying their own property, the fix and flips. And I haven't seen claims from wholesaling, but we got that exposure. A recent claim that we had where a seller approached an agent to buy their home. The agent was known to purchase homes in that area, fix them and flip them. So that was the agent was going to go ahead and do that, but was approached by another agent in their shop because they had a buyer. Basically, the agent did acquire a home in an LLC represented the LLC in the sale of that property, closed with a double escrow and flipped it for $100,000. And the seller's coming after him. He didn't disclose the ownership interest in the LLC, and the seller's coming after him, alleging breach of duty, purchasing that a personal LLC, knowing you could immediately fix and flip it. We paid $100,000 on that claim quickly. So yeah, so there are issues there. I do want to, what's important to note is that when you buy your own property, typically E&O policies do not cover agents in the purchase of their own property. Why is that? Most claims come from buyers. So if you're a buyer, you really shouldn't be getting sued. But now with, fix and flips and potentially wholesaling, we have much more exposure from a seller. I mean, you can control that exposure. If you're buying the property, you make sure you're disclosing the things the seller needs to know so there's no issues. But you need to be aware of that on the buy side. If you're doing something that's, might have exposure, you're likely going to be outside of E&O coverage. Fix and flips. We've seen, a decent amount of claims. I think last time I talked to Michael, he said that's probably one of the most frequent type of claims they're defending. Issues there are licensed contractors being used, permits, and level of seller disclosure, and that the seller didn't live in the property. Michael, did you want to speak to what you're seeing on your end?
Yeah, I will. Thanks, Lisa. Thanks, Lisa. The sewer septic lawsuits that we defend are probably the biggest by volume, meaning we get the most amount of those claims. But in terms of the damages we experience and the biggest lawsuits themselves, they're always the fix and flip. And really the reason for that is what we see oftentimes are, we call lipstick on a pig. So somebody will come through and they'll buy an older property. They'll do a very, very cosmetic type remodel. Oftentimes, in order to keep margins, the fix and flippers won't use licensed contractors. They'll use handymen. In some cases, they'll self-perform. They generally don't do permits. They go in there and they do the work as quickly and as cheaply as they can, without inspections, without permits and that sort of thing. And the reason why these claims can be so difficult and costly to defend is because what we'll see on the seller property disclosure statement typically is, to the question about were licensed contractors used, they'll say yes. Were permits required for the work, they'll say no. In most cases, those are false representations. Permits are required for almost everything. It's going to vary by jurisdiction. But for example, in the city of Phoenix, if you're going to replace a water heater, you have to have a permit unless you're using a licensed contractor to do it. So most of these fix and flips will require permits. All of them will require licensed contractors. And that's kind of a big, I think, misconception out there. People think that they can qualify for the handyman exemption or the exemption that says under certain circumstances, owners can do their own work on the property. Those aren't going to apply in a fix and flip. The handyman exemption is limited to $1,000 of the total cost of the project. So you can't get 3 different handymen and have them each do $999 worth of work. You don't qualify. The owner exemption for doing work on your own house only applies if you're not intending to sell or lease the property within 1 year after the work is done. And so if a fix and flipper is going to acquire property with the intention of selling it or leasing it when the project is done, they have to use licensed contractors. And not only that, but under the statute, they have to list the licensed contractors' names and license numbers on the contract documents. And we're just not seeing that. Again, we see a SPUD that says licensed contractors were used with no identification of who they were, what scopes of work they did. We see, it says permits weren't required, both false representations. And why this is such a big deal is because the damages can be enormous. In a lot of these cases, the buyers would be entitled in court to have the work completely redone with a licensed contractor. And so while the fix and flipper might come through and just do minor little repairs here and there with unlicensed contractors, a handyman, the buyer can prove based on those misrepresentations that they're entitled to have all of the work redone with inspections and permits and with licensed contractors. And if anybody's tried to hire a licensed contractor recently, will appreciate it's very expensive. In some cases, the fix and flipper may spend $10,000 on the fix, And the damages to correct everything with a licensed contractor could be, 5, 6, 7, or 10 times that amount. The damages also can include alternative housing while that work is done. And so we've had situations in which, it's a $300,000 or $350,000 purchase price, and the ultimate recoverable damages to the buyer based on these misrepresentations can be $250,000. So what I would suggest is if you're representing a buyer in a fix and flip, you need to advise your client in writing that they need to investigate what work was done, who did it, were permits required? Chances are they were, but there's a lot of additional vetting and due diligence that needs to go into a fix and flip transaction, and you just can't make assumptions about that the representations in the SPUDs were true, because more often than not, the representations are false.
And yeah, okay, so we've got a question. Does a flipper SPUDs that has nothing on it still give buyer the ability to pursue damages?
Yeah, absolutely. So the seller property disclosure statement is obviously required by the contract, but a seller who doesn't provide it, or provides a blank one, or on the additional terms section says, I remodeled the property, but I never lived in it, and therefore I know nothing about it. That's not going to, that doesn't provide any liability relief for the seller. The buyer is absolutely entitled to pursue a claim for damages if the seller either misrepresented what was done or failed to disclose it. And so, you could, I'll use another example. If the seller wrote out this SPUDs requirement out of the contract, that doesn't excuse the seller's obligation to disclose what was done to the property, what defects may exist, and it also doesn't change the contract requirements. Again, the flippers are required to use licensed contractors, and if they don't, they can be liable to the buyer for damages.
And another question, what do you do if a home had been updated years ago and no permit was recorded, may not even be by the current seller?
Yeah, that's a great question. And that happens because in some cases, the remodeling projects were done many years ago. I think that what you'd want to do in that situation is, again, just do additional due diligence, bring in a licensed contractor, find out what it would take to get the house permitted. That would be the best case scenario. Whether the buyer ultimately does that, that's up to the buyer, but they should at least find out. We have been involved in lawsuits where there were additions to properties that were unpermitted. And in some cases, whatever jurisdiction that property is located in can actually require the new owner to bring it up to code and have it permitted, which can be, very, very expensive, obviously. So the question about whether we can see what work permits are required, it's actually not the registrar or contractors that does that. Each local jurisdiction, their building department will set that. And so, for example, if you go to the City of Phoenix's website and then you click through to the building department, they've got a PDF, I think it's 2 or 3 pages, that highlights when permits are required and when they're not. Each city is going to be slightly different, and in some cases very different. I'll say the general rule is if you're just doing cosmetic things like paint, carpet, permits are generally not required. If you're getting into mechanical systems, plumbing, electrical, permits are going to be required. Anytime you move a wall, even if it's not load bearing, that's going to require a permit.
Okay. Could you give us some code information to send in a document to the other agent if information isn't supplied?
So I would again refer back to the city's, each city's website. And that's going to give you it's a really good itemized list of when permits are required and when they're not. And so, for example, if you're representing a buyer and it's clear that the seller maybe moved a wall, replaced an electrical panel, and they're claiming that permits weren't required, you could go grab that information from the city's or town's website, provide that to the listing agent, and say, no, absolutely, that work required a permit. If it wasn't obtained, it's a huge red flag. And if the buyer ultimately wants to go forward with the transaction, even though that work was done and permits weren't required, at a minimum, as the buyer's agent, you want to disclose in writing that, hey, you could be responsible for the cost to update that and to make it make it compliant. And that could be very, very significant.
Okay, great. So moving on, then general liability claims, I wanted to hit on those. In the past, again, not an area we used to see a lot of claims activity. What are general liability claims? Well, let's start with E&O. Your E&O coverage is if if there's an error or omission in rendering a professional service to a client, and they sue you because they were financially damaged. So you did something you shouldn't have done, or you didn't do something you should have done, and it's going to cost your client money. That's E&O. Your general liability coverage is if you're negligent and it results in third-party bodily injury or property damage. So someone's injured or direct physical damage to that property. We are seeing more slip and fall claims than ever. It's really kind of crazy. You're showing a home and someone falls down, or, in an open house. We had one just last week where there was a crack in the sidewalk. The tenant injured themselves and now they're going after the agent. We're having dog bite issues. We're having issues where an agent gives a lockbox code so someone can access leased property unattended. They get injured and they're coming after the agent. So be aware of that. More claims coming in from general liability. It's a different policy. And it's just, I don't know if you guys have seen any of that. Michael, have you seen this coming through your office?
No, we haven't seen that.
Okay, well, that's good. And it could be because it's going to the GL carrier, which is not necessarily the E&O. Fair housing issues. Again, fair housing, not really an issue that we used to see a lot of claims, but we are now more claims relating to multiple offers, escalation clauses, love letters, also issues, complaints, a recent complaint at the AG office alleging a couple was discriminated due to sexual orientation. Michael, I know you've probably been dealing with these multiple offer, fair housing, love letter issues. You want to comment on that?
Yeah, well, first, one claim that we're starting to see more frequently, and I think it's in continue in the future, that deals with fair housing issues are sober treatment facilities, sober living facilities in a neighborhood. They are covered by federal and state fair housing laws, meaning that under those laws, you're not supposed to disclose their presence to as part of a real estate transaction. I think that the number of sober living houses in neighborhoods is increasing substantially and exponentially throughout the valley. And a lot of buyers aren't going to want to move in next to one. And so when they find out that the house they just purchased is located next to or across the street from a sober living facility, it oftentimes leads to claims. They're difficult claims though, because that buyer is understandably upset in some cases. And they want to sue the listing agent, they want to sue the buyer's agent, they want to sue the seller. It's a tough claim for them to pursue because of the fair housing issue, which is, again, they're considered members of a protected class and therefore governed by those laws. The flip side to that is, the buyer still may be upset and still may lose. And even if you're successful in defending an E&O claim, there are still costs involved. There are defense costs that, as Lisa mentioned before, are going to affect premiums in the future. And then there's still the hassle of dealing with a lawsuit. You may be deposed, you may have to appear in court, ultimately you may have to go to trial. So what I would suggest there is, when you're representing a buyer client, have them talk to neighbors. I know that's part of the buyer advisory, but I would specifically recommend that. That's the level of due diligence a buyer should be doing, not just going to the house once, touring it and saying, let's write an offer. During the inspection period, they should be talking to neighbors, and they should be going to the house at different times throughout the day and even into the evening at night to find out what the neighborhood's like, because that's how you avoid those claims. As far as to Lisa's point about the multiple offers, yeah, that's certainly an issue as well. Because if somebody thinks they wrote a good offer and it wasn't accepted, they may question why it wasn't accepted. And if they think it's based on, race, religion, or some other protected class, you could see a claim there as well. And so, I guess on the listing agent side, from a risk reduction standpoint there, make sure your clients are aware of the issues and that the protected classes obviously cannot form any part of the decision-making process when it comes to deciding which offer to accept.
Property management. We've seen a tightening in the insurance market with respect to property management because these claims have increased too, claims from tenants with mold, water issues, and security deposit disputes. That's fairly common. We're getting a lot of those in my office. Also claims from insurance carriers that are subrogating against a property manager because the damage to the property, it's alleged, emanated from the negligence of the real estate agent. So they pursue you in a subrogation claim. Also, what's impacting property management is the uncertainty of the moratorium on evictions and how that's going to play out. And I know NAR is expecting to see more claims with respect to evictions. And also the condo collapse in Florida and how that reverberates back to property managers. If you are doing property management, really important in the property management agreement with the owner that you require they carry liability insurance and they're naming you as additional insured. So if there's a claim that you're named in as the property manager that emanates from the property itself, it's not your exposure, your negligence, but it's something from the property and you're named as well, you would look to their policy to protect you. So you want to make sure that you have, you're enforcing that. Your agreement states they need to carry insurance, they need to name you as additional insured, you're getting that certificate. And if a claim is tendered to you, you turn it back and send it to them to defend you. And also that tenants are maintaining liability insurance as well. So hopefully you guys are meeting those, making sure you're doing that to mitigate your exposure to a loss. Ethics issues, ethics complaints agent to agent. We're seeing a lot more of that where it's coming into our office, not really an E&O issue when someone's complaining. Recent one was the agent was biased and didn't present the client offer. So they're filing a complaint at the department. TCPA, we are continuing to see these lawsuits against realtors for violations of the Telephone Consumer Protection Act. This is where you're sending out a pre-recorded message without the consumer's written consent to receive such calls. And calls placed to consumers who have registered their number on the Do Not Call registry is a violation of TCPA. Fines that can be assessed for violations of TCPA, $500 per each violation, up to $1,500 per willful violation. And what you need to be aware of is most policies exclude coverage for violations of law, as well as fines and penalties. So what we've seen, I've seen a lot of these claims, and I'm not aware of one that's been defended by a carrier to this point. Michael, have you seen, I know you've had some of these claims. Have you seen any coverage that's been afforded, and what are you seeing?
No, we've never had, we've had claims that were submitted to carriers, but never coverage picked up. And what that means is, if you violate the TCPA or the Do Not Call registry, you're on your own for that claim. You're going to be named personally. You're going to have to provide your own defense. It's going to be an extremely expensive defense given the nature of these claims. There's not going to be insurance coverage. And so that's probably the single biggest area of personal exposure that you could have as an agent is in the TCPA Do Not Call registry area. Because, with a typical E&O claim, that's, maybe a negligence claim against a listing agent alleging non-disclosure, there is coverage. And the coverage will include not only the defense costs, but any settlement dollars or an adverse judgment. But for these TCPA Do Not Call registry type claims, there's not going to be coverage ordinarily, and that means that you're paying out of pocket. And I think the last one we did, defense costs were about $70,000 from the beginning of the case until settlement. The settlement was about $150,000 additional. So the total exposure was about $220,000, and none of that came from insurance.
It's a big number. Really, so really important that if you're doing these pre-recorded, that you're gathering up the do not call list, the registry every month, and checking it to your client base and making sure, really important to do that. That's significant exposure.
And just to piggyback on that, don't trust if you're getting these lists from these companies that sell these lead lists and things, don't trust that they've scrubbed it, even if they say they do. You need to scrub it yourself. You need to take that initiative and make sure that's done. That's just critical. So just
Absolutely.
a side note.
Short-term rentals, we're starting to see this become an issue where a buyer purchases a property to use as a short-term rental on Vrbo, Airbnb, close on the property, then find out that the HOA CC&Rs have been changed, they don't allow it, and they're coming after the agent for the lost rental income. Last one that I had on that was $150,000 of lost rental income. So make sure if someone is you know, that's the intent of the property be used as a short-term rental, that it's allowed. Otherwise, we're going to have exposure there. Referring to third-party professionals, this is something that I've talked about over the years. Actually didn't have it on my list. I know Shannon's heard me talking about it. Had to put it back on my list. Where a listing agent coordinates work, and if the work is defective, they go after the listing agent. The recent claim we had this, it just recently, it's alleged that the agent represented the buyer in the purchase of a condo. The agent was also hired to basically locate a contract, to hire a contractor and get the permits to do some work in the condo, some repair work, which involved of course, a hot torch. And as you can imagine, a fire ensued in the owner's unit and to the common areas as well as neighboring units. To date, we have a lawsuit from the condo association's insurance carrier, $1.2 million in damages that they paid. And then 2 individual unit owners, their insurance carrier have subrogated $42,000 and $40,000. That is a significant size claim. So all emanating from the fact that the agent hired the contractor to do that. All right, we see other claims where it's alleged the agent failed to hire a competent inspector because the agent contracts directly with the home inspection company, and then something goes wrong and they allege that it was a materially deficient inspection. You know, this keeps us in the firing line from a risk mitigation standpoint. It really is to mitigate our exposure. We've got to recommend 3 and let the client choose, as you know, on that, and you know what contractors they're bringing in to do work. Michael, I know you got something on this.
Absolutely. So I see a comment here from William Campbell, best not to be all things to all people. And that's absolutely right. As a real estate agent, you don't want to expand the scope of your duties. And what I mean by that is you want to be the source of the information. You want to provide multiple referrals to licensed professionals. If you take it the next step further and you expand your scope, that you actually go out and hire those licensed professionals, then you're going to be potentially on the hook if something goes wrong. And I would equate this with, you know, a final walkthrough. If you're representing a buyer and they're coming from out of state and they're not going to be present for a final walkthrough, and they ask you to do it on their behalf, that's not a duty that you owe as a real estate licensee. And if you agree to do that, you're expanding the scope of your duties and you're assuming the role of a licensed home inspector. And that's no different than hiring a licensed contractor in Lisa's example. If something goes wrong, you're going to be sued for it. And so, you know, be the source of the information, provide the referrals. If a buyer client's not able to be at a final walkthrough, you know, I think you need to explain to them the absolute importance of it and have them hire somebody, you know, a professional on their behalf rather than you as the licensee. Maybe that's the home inspector, maybe it's a contractor. And in the event they need to hire somebody that's not the real estate licensee to do that.
So a couple questions. Michael, they were saying that you suggested earlier to pay for the sewer, the plumber, and hire it. So what's your suggestion?
Yeah, that's a great question. So in an ideal world, that sewer scope would be paid for by a buyer. And if you can convince your buyer to, you can provide 3 different plumbers and they can go hire somebody to do it. If your buyer that's the best practices approach, right? You tell your buyer, hey, this is an older home. It's very important that you get the sewer scope done to verify the condition, also verify that it's sewer, not septic. If you've got a buyer that says, absolutely, I'm willing to take the risks, that's when you may say, you know what, I'm going to do this on my own just for everybody's benefit. The risk there is pretty low. I guess the risk would be that if that plumbing contractor does a poor job and doesn't, determine that the lines are bad, then there could be some exposure, I guess, but there'd be exposure regardless, whether you did that or not. It doesn't create exposure like Lisa's example, where you're hiring a contractor and they burn down half of a building. So yeah, it's if you hired the wrong licensed plumber to do the scope and they screw it up, sure, that's not, you could be identified or named in a lawsuit there along with the plumber. But the point is, it's better to at least do that than not have the scope done at all. And I will say too, I think the risk is also low because what we're talking about doing it's pretty basic work, and I think it's pretty inexpensive to do the scope. I think any licensed plumber could very quickly determine the condition and verify sewer septic. It's not complicated.
What if you're on FaceTime with your buyer at a walkthrough?
Again, I would absolutely recommend against it. The buyer needs to have their home inspector or licensed contractor at the final walkthrough, particularly if there have been repairs that have been done as part of the BINSR process. Because a lot is going to be missed through FaceTime. You can't see the quality of work, you can't see the repairs, you can't see the condition. You're going to miss a lot. And if something is missed, the buyer is going to blame you and say, you were there physically, I was relying on FaceTime, you should have seen that, this wasn't done properly, or the condition of this aspect of the house changed between contract and final walkthrough.
Michael, what about the other half? So many people are buying houses via FaceTime, right? It's not uncommon to have 2 or 3 offers on my listing, and more than half of them have never been in the property. What's our liability of representing somebody who we're walking through a house, showing them on a camera, and they're going to purchase? And unfortunately, we've closed a lot of transactions where the buyer's never seen the home.
Yeah, I think from the buyer's agent standpoint, it's disclosure. It's telling them, look, you've got certain due diligence obligations on the contract. You need to physically investigate the condition. And the only way to do that is in person. If you're going to rely on me to do a walk through the home with you on FaceTime, I would put some kind of a disclaimer. I would say, you're not going to hold me responsible for the property condition. I'm not the licensed inspector. You need to hire your own inspector. You need to do your own due diligence. I'll do this walkthrough for you as a courtesy, but you understand and agree that you're not relying on me to do that due diligence. You're not relying on me to investigate property condition. I would have that all in writing, and so that the buyer can't then come back and say, no, you told me you were investigating for me, and that's why we did that walkthrough. And then I would absolutely insist in that situation on the buyer having a licensed home inspector and the buyer having that licensed home inspector do the final walkthrough, even if the buyer is also going to be present on FaceTime. There needs to be the professional that does the final walkthrough as well.
Thank you.
So some comments, problem with FaceTime is you can't show people odors. That's a great comment. Maybe we should have a form for that, Nate.
I was thinking the same thing.
Yeah, I was too, Nate. Let's chat afterwards, because absolutely, if a buyer is going to close escrow without setting eyes and touring a property themselves, I think a form would be appropriate in that situation so that it understands the risks involved and that they're assuming that liability themselves.
I'm starting to shake because we're closing 3 transactions with people from out of the country that have purchased homes from us. And 2 of them were actually dual representation with other agents in our office. So it's kind of scary.
Yeah, that's good.
My computer shut down. Sorry guys for a minute there, so I missed a little bit of that. But
Oh, you missed a lot.
I probably did, and that's
Again, and we decided we're going to start delivering pizzas.
okay. I'm in.
That's perfect.
But as far as the form goes, if we're talking about a waiver of the pre-closing walkthrough, the pre-closing walkthrough form AAR has that on it already. There are 3 sections to it.
It's a little bit broader than that, though. It's a situation in which a buyer closes without ever physically being in the property, and they're relying on the buyer's agent to do a kind of a FaceTime walkthrough, not only through the final walkthrough, but I think even throughout the contract process, they're relying on the agent to do FaceTime walkthroughs.
Right.
And as I mentioned, I think that's particularly important that they don't waive a final walkthrough there, and they have a final walkthrough done by a licensed home inspector or contractor.
Right. Agreed. And we do have some language that we have a clause for that, for those situations where they recognize they're not relying on the agent for video recordings, those kind of things, that they're responsible for their own investigation and hiring folks like that. But we can certainly make that a form if that's what everybody wants.
Yeah, I think the key is like Shannon, there's so many of us that are answering a call on our listing or on a listing.
Mm-hmm.
They're out of town. The agent goes out and does a video walkthrough. They close on the house with never seeing the house, right? What you missed was that's a huge exposure for us. And William had asked maybe we should have a form that is very clear before we even go out to do, because it's not in the contract, right? It's before you even go out there and do this virtual walkthrough, virtual showing.
Yes. Yes. Yeah, I mean, the language is the same, to be honest with you. It covers that, but I can make it into an actual form. That way you could get ahead of time. That's easy enough.
And I don't like extra forms.
Well, that's why we hadn't done that yet. Because believe me, I would have made it a form.
Yeah. So let's look at a form for that.
Yeah.
Okay, so moving on, wholesaling, want to hit on that. I don't know if you guys anybody's doing it, but the issue with wholesaling is really more so along the lines of, is there E&O coverage? That's kind of where we're at right now. So we pulled some of our E&O carriers, and there appears to be real coverage challenges for this exposure. One carrier has put an outright exclusion. They don't want the exposure for wholesaling. Another underwriter advises that they don't consider it a covered professional service, and it's not a risk they intend to insure. And another carrier advises that the practice of wholesaling could present coverage complications based on the nature of services provided, and they're not looking to write firms doing that. Issue with wholesaling then is going to be, if you're doing that, there's going to be real coverage issues. Particularly on that purchase side, that's where we're exposed. So just putting that out there, if you guys are considering that, it's likely going to be an exposure that's going to sit outside of E&O that you take on yourself. So make sure you're talking to Shannon about it, because the firm's exposed as well. And it's just, very new, carriers don't like it. And there's going to be coverage issues.
And to piggyback on that, what I've told you guys in the past that we're running into that you need to be very careful of is we have buyers out there who are approaching you to represent them as a buyer's agent, and they're not telling you that they're planning to wholesale it. And they've got a title company that's doing this in the background, and you're not finding out about it until we question those name issues that we're seeing at close of escrow. So we get a settlement statement with different names, and we start asking questions, and then we find out, well, by then the damage is done, if you will, in terms of we're representing those folks, and that's a dangerous place to be. So you need to be having good conversations with any buyers you come across who are purchasing in LLCs would be an obvious one. Start asking them if that's something they're doing, or if they're paying cash, those kind of things, because those are the ones that obviously we're seeing that happen. So be careful.
Michael, what's coming up on your radar screen on wholesaling?
Yeah, it's the double escrows that are not disclosed. And you know, in many cases that's legally fine, but it's going to upset a seller if they find out that, you know, that particularly if you're on the listing side and they think that they're getting, you know, top dollar for their house, only to find out that there's an interim buyer who they thought was the ultimate buyer who's making $50,000 off the transaction, just double escrowing it. So yeah, it's staying out in front of that and trying to you know, find out when it happens and make sure your seller is aware of it. That's helpful because otherwise, you know, a seller is understandably going to be upset.
Okay, let's talk about cyber. We are continuing to see wire transfer fraud claims. Recent claim that we had $500,000 in funds that was wired to an unauthorized account. Now, the good news is they actually recovered 410,000 of that, which is amazing. I just don't see a lot of I don't see that result typically on these. Usually the money's gone, it's wired to, you know, another country, and they take it out quick, and, you know, by the time you get any authorities involved, the money's gone. But so I wanted to really give you an update on what we're seeing in the cyber market, because it's evolving and changing, and again, another line of insurance that's really taken a hit and pretty volatile. We work with a cyber carrier that's one of the largest writers of cyber insurance. They write a lot of real estate companies as well, and they've compiled a 2021 cyber insurance claims report that I have here. I wanted to share with you the information from their report. You know, first of all, when we talk about cyber risk, it's set to become the defining risk of our age. Never have companies and individuals been more dependent on technology as we are right now. With the escalation of ransomware attacks and cyber crimes impacting everything from critical infrastructure to the corner store, one thing is clear, that addressing cyber risk matters for everyone. So looking at analysis of their claims data through the first half of 2021 reveals a number of evolving trends. Number one, cybercrime is increasing like never before. Leading the way, business email compromise incidents. The frequency of reported incidents for business email compromise increased 51% from 2020 to 2021. Funds transfer fraud is the next common incident type, increased 28% over the first half of 2020. And finally, ransomware incidents. Yikes. Finally, ransomware incidents began to increase in 2021. Okay, keep trying.
Mike, can you get that?
I'm looking because I think pretty much everyone is muted. Try again, Lisa.
All right, we good? We're good. Thanks, Michael. Ransomware incidents increased.
Lisa, maybe we've been hacked.
Are we good again?
Sounds like it. We good? That was really timely for that to happen.
Between my computer shutting down and that, yeah, it's like,
That's really interesting.
yeah.
Okay, so back on ransomware, they really came on the radar screen. More concerning is not the frequency, but the severity. The average ransom demand made to this carrier's insureds in 2021 was $1.2 million, which is an increase of 170% from 2020. I mean, we've seen our insurance, we've had an insurance company, a large insurance company, who's a major writer of cyber insurance. They were hacked, they were locked up and locked down for probably 6 weeks. Their ransom was, I believe, one of the largest, larger than the pipeline. I think it was $30 to $40 million. And we could not reach our underwriters, our claims people. Michael, we were talking about this yesterday. You know, it's a big deal, and it's not just the big firms, it's the small firms. So ransomware is really coming on. It's just easy for these guys just to get in and do that. The average amount of funds stolen increased 170% 2021 versus 2020, from 116,000 to about $326,000. So ransomware and funds transfer fraud accounted for 50% of their known losses. So when we know that, you know, first of all, I really want to impart, you know, what we hear a lot of in my office is, why do I need cyber insurance? You guys have cyber insurance. The firm carries that, you know, but why do I need it? I'm in the cloud, I don't have exposure. No, everybody does. If you're in the cloud, I can assure you, and we've talked to my cyber carrier about it, that the cloud vendor is not going to indemnify you when they're breached and you have a loss. They're not going to be indemnifying you, and you've got exposure for choosing that cloud provider. So we have significant exposure here, particularly in real estate. And with the wire transfer fraud and ransomware, I think there was a firm in California that was locked up for several weeks on a ransomware attack as well. So it's you know, I know you guys say you're freaking me out, but it's an exposure that we want to be aware of. And you know, how do we manage that risk? Well, first and foremost, number one, I know you guys are doing this. You need to educate your buyers about wire transfer fraud and what to be cautious about. You know, you're not emailing any wiring instructions, and your buyer understands that they need to confirm all wiring instructions in person or by phone using a verified phone number before transferring the funds. You know, we've had scenarios, and we were talking about, you know, now they're so sophisticated, they're actually initiating calls that sound like it's your voice, but it's not. So there's a lot of things going on with regard to that. So you're doing all the, you know, educating your client what they need to know. And then the next piece of that really hasn't been there is our cyber security, protecting our, you know, devices, using password managers, multi-factor authentication. The cyber market is in absolute turmoil because of all the claims and the carriers pulling out, and how they're coming in and writing you. And they're pretty much going to, some carriers are saying, you have to use multi-factor authentication or you're not getting a quote. Carriers that we're using aren't doing that yet, but that's on the radar screen. The training, agent training with respect to cybersecurity. So one of the things that this carrier has provided is a cybersecurity checklist, which is really interesting on just steps you can take to secure your business. And, you know, they talk about multi-factor authentication, maintain full data backups, enable secure remote access. We're working remotely, making sure that's secure, updating your software regularly, using a password manager, scan for malicious software, encrypt your data, security awareness training programs. So I'm happy to share this with Shannon, and I know Shannon and
we are working on getting coalition in here.
Yeah.
That's on our, yeah, we've been going back and forth with them. You guys, one of the carriers, or I think they're our carrier, correct, Lisa, if I'm not mistaken.
Yes.
They do some cyber training, and we are working on having them bring that training to us. So we've been going back and forth to get that on the books for you guys.
Yeah, and that was one of the things that I was pretty excited about working with this carrier in the last probably year and a half or so. They came on board. Is prior carriers were just offering an insurance product, but what they're bringing to this table is the cybersecurity piece. So, you know, before they write you, they do a cyber risk assessment report, and they're doing domain scans. They rate you as to your risk. And then they constantly monitor the insured systems, and those are your email accounts too, to see what's on the black web, and they're monitoring for vulnerabilities. And if there are any, like, they let you know, hey, this is going on. We can have our security professional work with you to lock that down and prevent that breach. They equate it to like walking around a house and making sure the doors are locked and, you know, the windows are closed and the alarm systems are on to prevent a breach. They have partnered with several cybersecurity firms that they offer the employee agent training, multi-factor authentication, remote access, all training programs that really help you with securing your cybersecurity. So Shannon and I are working with them to see if how we bring them in to implement that with you guys, and really, really important when we look at this exposure. Michael, did you want to weigh in?
Yeah, if I can, well, first I'll echo what Lisa said, and that's the wire fraud schemes are getting more and more sophisticated. We were involved in one last year in Colorado, in which the buyer's agent had a Facebook page and she had video, and the hackers basically took the recorded audio from that Facebook account, and they had a software program that allowed it to create a new message based on her voice. They used that to send a voice message to her buyer client who was in California. And the message effectively said, in that agent's voice, you're going to be receiving wiring instructions within the next 5 minutes from the title company. You know, disregard the previous ones, send the money immediately using those instructions. And after the client got the voice message and believing it was from actually her agent, new email comes in. It's a spoofed email. It looks like it's official. It's not legitimate. And she wired $160,000 on that basis. So these things are getting more sophisticated. But as Lisa mentioned, there's two ways for a client to handle a wire transfer. The best is in person. And so if I'm in a wire and I'm here local, I go to the escrow office. I get a copy of the escrow or the wiring instructions directly from my escrow agent. I take those and I go directly to my bank and I initiate the wire. If a client's out of state and they cannot do it in person, then they need to, once they get the wiring instructions, they need to call their escrow officer at a known verified number. That's not a number that's provided on the instructions. That should be a number that they received at the beginning of the transaction, because that's another common scheme, is that if there's a hack and fraudulent wiring instructions are sent, they'll also send a bad phone, and then they'll try to mimic the escrow officer. And so when you call, they would verify the wrong instructions. And so, yeah, there's got to be, clients have to be aware of these issues, and these wire fraud schemes happen all the time, and they constantly change and evolve. And so what they're doing today is not going to be what they're doing tomorrow. These things are getting more sophisticated, and your clients have to be very, very careful if they're ever going to wire money.
Another thing that I've seen in my office, just real quick, and I'm going to wrap up and just turn it over to Michael, is the requests, people sending requests to you guys requesting your insurance information because they want to file a claim directly. So don't ever give out any insurance information relating to any type of insurance you have. Get with Shannon. There's no reason to do that. That's something we'd go to Michael on, how you should deal with that. But because someone requests it doesn't mean we provide it. And one last thing I just want to hit on, we talk about, I know you guys are so good at letting Shannon know any claims or potential claims, and we work close with Shannon on that. Just reminding you, a claim is typically defined in your policy as demand for money or service. So that's pretty broad, a demand for money or service. It needs to be reported within that policy period. So, you know, when you look at, is a lawsuit a claim? Absolutely. Demand letter from an attorney or client a claim? Yep. Threatening email could be. Verbal threat, possibly. Know when you're dealing with a claim, when it needs to be reported, when we have to report it to the carrier, because here's what happens. And probably the most common reason why claims are denied is because something is not reported timely. All right. So as an example, this is typically what happens, that, you know, an insured receives a demand letter for $5,000 and does nothing, files it away. 18 months later, they get a lawsuit with a $150,000 demand, turn it over to the carrier, who denies coverage as the claim wasn't reported timely in that policy period. And you prejudice the carrier's position by not letting them solve a $5,000 issue in a demand versus a lawsuit with $150,000 that we know we're going to spend attorney's fees, other costs. It's going to cost a lot more. Why do we do that? Well, because we don't want our premium to go up. We don't want to pay our deductible, or you didn't do anything wrong. It's a money grab, but it's a lot cheaper to pay the deductible or the increase in premium than to pay an uncovered claim. So just, you know, making sure you keep that communication open with Shannon.
Thank you, Lisa. And just as a side note to that, you guys, we had more potentials, you know, every year. You got this last month where I'm pounding you to turn in those potentials to me. And we turned in more this year than I recall in my years doing this, and even when I was helping Frank do this. So, you know, the issues are out there. The market's created these. We've talked about this, but you have to let me know so we can try to navigate those early and get them done. So to get them on the books if we need.
Shannon, if I can jump in there, you know, we get a lot of demand letters, and oftentimes they're written by a buyer directly, and they're wanting $5,000, as Lisa mentioned. And you know, the agent's response is typically, I didn't do anything wrong. I don't think any, you know, I don't want to pay it. I don't think a claim should be filed because I don't want the carrier to pay it, and you have to pay the deductible. And at the end of the day, we oftentimes settle those claims, not for $5,000, but maybe for $1,500 or $2,000. And when we do that, we get a broad mutual release. And what that means, well, what precedes the $5,000 demand is that the buyer closes escrow and they find a roof leak or something else that's modest in nature. If we settle that claim, we do it with a written settlement agreement with very broad releases. Those releases will cover anything that they may find in the future, anything at all related to the transaction or to the property. And so if the demand is based on a basic roof leak, and we settled that claim for $2,000, if 6 months later the buyer finds a significant foundation problem, mold, or whatever, it's going to be covered within the scope of that release, and there won't be a $150,000 lawsuit on the back end. And so that's not to say we're going to settle every demand that comes in, but there are some benefits of at least considering that. And as Lisa mentioned, the risk is too great not to at least report that as a potential.
Right. Nate?
Yeah, Mike. So many times in our profession, we get stuck with what's called a commissionectomy, right? Where there is a demand before closing for a couple $1,000. And I think probably practice is the agent just reduces their commission a couple $1,000. From what you just said, I don't think we should ever do that without having such a release signed. You know, I don't know how many times in my 35-year career, I've reduced my commission to fix a problem, but never used an additional document other than, okay, we'll solve the problem, we'll reduce our commission, or we'll cut a check, or whatever it might be. So I think one of the biggest challenges I see as an owner, mostly hearing through Shannon, when there is a challenge, our agents, and I love all you guys, sometimes get stubborn and don't want to solve the problem, right? And sometimes a couple $1,000 is better than a $5,000 E&O deductible. And even if you pay an E&O deductible and you go to court, and every lawsuit that we've been in court on, we've won. Knock on wood. well, not everyone, but the ones that went to court.
Hmm.
It's time, the amount of time we spent on the last mold case was in the years, and hundreds of hours of people's time gets eaten up. And we tried to solve that one before, but we didn't. We had crazy on the other side, and there's a lot of crazy people out there, but we need to try to do what we have to do in the beginning before it gets challenging. You see, we have the best attorney, we have the best insurance company, the best broker, and the best agents, but we're still involved in so much minutia when it comes to liability and representation or somebody's expectation not being met.
And to Mary's question, she's asking if we have a form for that. Sort of, but that is not something I would ever put out for you guys, because we want someone like Michael to look at those agreements and those settlements and to help us draft those. And I can tell you, we've unfortunately had to do several of them because, that $1,000 issue or $800 issue or something, we want that protection, and we want to make sure it's clear to the client that we're doing this out of an offer of customer service, not that we're taking on any responsibility for whatever it is they're making the claim for, they're having a challenge with. So we run all that past Michael before we put anything like that out or get it signed. So.
And is that mostly after the fact, though, after a closing, that we're bringing Michael in? I'm more talking just in the negotiations of a transaction through a BINSA, right, through something.
I mean, typically it's because I don't see them till after. So maybe, yeah, I don't know when you're reducing, that's why you're doing it unless you tell me. So, so I guess Michael, would be the same thing. We would want everyone to let us know what during that transaction, that's why they're reducing their commission potentially.
Right. So I'm not ever involved, or rarely am I involved before closing. It's usually when there has been a demand after the fact. Right. But then to Nate's point, absolutely, I think we could put something together. That because ultimately when you're paying something, whether it's after closing escrow or if you're paying it in the form of reduced commission, you want certainty, and you're paying that. And what you're bargaining for is I'm paying you money to deal with this issue, and there should never be an issue into the future. And that's the nature of the release that we draft as part of a settlement. And I don't see why that would be any different if it was pre-closing as part of a commission reduction. But absolutely, that's something we could work with you on.
I mean, that's great insurance. You really think about, if I'm going to reduce my commission $2,000 and they're going to sign something for that reduction that releases all future liability, that's great.
Yeah, I think the question is going to be, Nate, whether it has to be specific, whether the agreement needs to be tailored to the actual transaction, and from an enforceability standpoint, it would be better. So rather than just having one document that says, in exchange for a reduction of commission, you'll never sue me. Ideally, it would be more tailored, and it would say, in exchange for this payment, you agree not to pursue me for any claims arising out of, and then the physical characteristics that we're talking about. But yeah, I think that we should definitely sit down and talk about how we can do that.
Yeah.
Making notes.
I don't see anybody really smiling on this call. Where's all our smiles? Everybody looks worried.
Are you, Lisa, you've gone through most of your bullet points. Michael, are you good? Or can I chime in on a few things here, or are you guys ready?
Yeah, I'm good, and I'm happy to answer any questions. I did see one that we missed, and the question was asked about permit requirements if you're using a licensed contractor. And the answer is permits are still required regardless of who does the work. So even if you hire a licensed contractor, if the work is such that a permit's required, that licensed contractor has to get a permit.
And piggybacking on Lisa's story about that condo, if I remember correctly, that was a handyman type of thing, potentially, where that fire started. And it was over an ice maker line or a refrigerator line. You guys, these are little things that turn into huge things. We think, it's no big deal because we see this all the time, that valve that's leaking or that line that's leaking or whatever it is. But the liability exposure of taking care of something like that, we're taking on the whole thing if it does go wrong. So,
that's not the first time I've seen that claim. I've seen it previously, and it's a fire, and yeah, that's a big deal. So
yeah, huge. So
Shannon, before you get going, I got one question for Michael. There's something going on in our valley, maybe across the United States, where a buyer comes in and writes a contract on their contract to buy a house from any one of us. And then it's never canceled, and maybe escrow's never open. And then they have a valid contract with no close of escrow. And what is happening is people, those buyers, those crooks, if you will, are then filing a lien on the house for that contract. Can you maybe talk a little bit about that and what we should be aware of?
Yeah, absolutely. So in general, the way the contract works now, if there's an offer that's written on a property and it's accepted by the seller, and if it's not canceled with the title company, and that ordinarily requires mutual cancellation, it can exist almost in perpetuity, because even though there's a specified close of escrow deadline, let's say it's October 1st. If October 1st comes and goes, the contract is still in place and the escrow is still technically open until it's canceled, or until one party issues the cure period notice, 3 days goes by and then it's canceled. But otherwise the contract can stay in existence. And so there's a couple different things the buyer can do in that situation. What we're seeing is some unscrupulous buyers are actually recording the contracts. Mm-hmm. And that can become a cloud on title, and it can be very difficult to have that removed. And in fact, in many cases, title companies won't insure around that. The seller would have to file a lawsuit against whoever recorded the document to get it released. And while they may be successful in doing that, it could take 6 or 8 months or longer and perhaps even longer than that, to get a court order removing it. How you stop that, I don't know, Nate, to be honest with you. But I think anytime, if you're involved in a transaction, somebody's recording the contract, that's a huge red flag. And if you're representing the seller in that situation, I'd have the seller consult with an attorney right away, because that does cloud title. And if ultimately the buyer doesn't close, it's going to be very, very difficult to close escrow to somebody else. So yeah, I think that's a situation where if somebody's recording a contract, they need to get an attorney, and they need to consult with an attorney right away.
So best practice for us to be looking to, maybe asking that question on listing, have you been under contract? Because, I'm hearing this is a big thing. I don't know how big it is, but there's people going out just writing contracts on houses and never intent to close on them, just to record, to try to use ransom.
Here's what's happening. We've seen it. We haven't been involved in one, but we've had one of our agents who had a seller who was getting ready to list, had mentioned that they had this offer, and it was just like a 1-page contract that these are not licensed people that are doing this. These are not agents. They're coming in, they're making this offer to the seller. They have a close date. They don't fulfill that close date. A year might go by and they don't even realize. They think because it didn't close, it's the seller, they didn't have an agent. They think that because it didn't close, that it's gone away. And in the meantime, they've recorded it and they've put this on here. And what happens is, at that point, what they're doing is holding the seller hostage, because the seller, when they want to sell the house, they need to clear that. So they tell them, well, we'll clear that for, this buyer. We'll tell the seller, right? Yeah, you'll pay, if you pay us $5,000 or $10,000, we'll remove that for you. Well, oftentimes the seller is doing that because it's cheaper than filing a lawsuit to do it. And so they're kind of holding them hostage, and these folks are out that money. And the challenge is the department can't do anything because they're not licensed. Right. And that's the whole issue. So on the seller side, Nate, to your point, yes, we should be asking our sellers as we're listing those properties, have you entered into any contracts or anything we need to be aware of that way?
So Arizona has a statute that directs or would address that issue. It's called ARS 33-420. It's the wrongful lien statute. Ultimately, it's going to be the seller's decision. And I think it's going to be a function of how quickly they need to sell the property versus how much the demand is. But under 33-420, if somebody files a wrongful lien against your property, and in this case, I would consider that a wrongful lien. A contract shouldn't be recorded, in my opinion. But if they were to file a lawsuit against the party that recorded under 33-420, they can recover their attorney's fees and cost of the lawsuit. They can recover up to 3 times the damages that are caused by the wrongful recording, and they can get a court order that eliminates that recording. Again, that may take 6 or 8 months to get that relief through the court system. So if the seller absolutely had to sell the property immediately for some reason, maybe the seller would decide that rather than going through that process, I'll pay $5,000 to get the release. But ultimately, the seller needs to consult with an attorney about those options. But there is legal relief under the statute for that exact situation. But I think the seller needs to talk with an attorney, and the seller also needs to know that because that contract is recorded, they're not going to sell it to somebody else until it's resolved. If the seller, is fine paying ransom, that's the seller's decision. I wouldn't advise it because of the moral hazard involved. If a seller's paying $5,000, they're just incentivizing that person to go do it to others. So I think the appropriate step would be, filing the lawsuit to remove the lien through the Superior Court. But either way, the seller needs to talk to an attorney right away.
For sure. So we're over on time already, you guys, and I had a whole list of things I was going to mention, but we've had good questions. And so I'm just going to address a couple of things that I've seen in the chat and be as quick as I can here to just wrap up if you guys don't mind, and we can go there. So first thing I just want to mention is it had come up in the chat about doing a wrap, whether or not that was something we allow. And it was actually already on my list, Colleen, to mention this, but every year we remind you of what we call our company policy in terms of prohibited transactions, and that includes wraps. We don't allow them for a slew of different reasons, because even with disclosure, you still have a due on sale, clause in your loan agreements. And if anybody's not sure about that, we can talk about that another time. We could go down a rabbit hole, but we do not do wraps. We don't allow them. We do not do lease purchases. Those are coming up a lot. We do not allow them. They never work for a million different reasons. So if you've ever had a client approach you about that, we need to figure out a different solution. You need to come talk to me. We'll talk through it and figure out a way to make whatever it is they're trying to do happen. And those are the biggest ones, to be honest with you. And then the other thing that wanted to mention to you on the because I've had this recently several times, is on the unaffixed manufactured or mobile homes. So when a mobile home is sitting on a lot that's leased and that mobile home is not affixed to the land, although legally the law changed a few years ago that we as licensees could do that, make those sales without a dealer license, which used to be the requirement. Our coverage for our insurance, for E&O coverage, they don't consider that real property. It's like a car sitting there or an RV. It's not real property. So we have to know that we do not have E&O coverage for those. And I would tell you, I wouldn't be excited about someone doing them anyway for the fact that it's an entirely different process. It's a different contract. The title insurance for that is as a commercial title, you have to have the title company that has that kind of coverage and can do those kind of title searches for you. It's an entirely different bird. Just don't go there. If you have someone who's approaching you about that wants to buy or sell one of those, come see me. We've got, or reach out to me. We've got some folks around the valley that we can refer them to. Again, kind of that same thing, staying within our area of expertise, but we also don't have, coverage for those because they do not consider them real property. My final two things that I want to mention, well, three things, sorry guys, is that, our E&O also every year, and this is just a reminder, and it is in our policy manual, but they do have some benefits, if you will, if we have certain things in every single transaction filed. And those 4 things that they include are that a seller disclosure form was completed by the seller and signed by the buyer during the transaction, that a home warranty was purchased, and that a home inspection was completed and a copy provided to the buyer. Obviously, if we're representing the buyer would get that anyway. And if and then that you're using state or local approved contracts and forms. So there's a reason for those things. And as this leads to my next point as to what Lisa was saying in terms of this last year where so many waivers were being done and people weren't reviewing sellers' disclosure statements and they were just waving away inspections and not doing any of the due diligence that we know is important, we are going to see the fallout from that. And it's already happening. I'm already, again, the potentials, the things that I'm dealing with are from closings from March of last year, June of last year that are hitting my desk now. And there's a reason those requirements are in place by the insurance carriers, because they know if you do those things, the likelihood of claims is going to be less. So I encourage you, do not ever waive those things. The other piece of that is that now that the market is somewhat, I'm not going to say adjusting entirely, we all know that it's still crazy out there, but instead of 30 offers, you might only be getting 3, and it might be a little longer on the market listing. And what I'm seeing and already having challenges with, and I can see this getting far worse, is that buyers are now requesting repairs where they were waiving these things or not requesting repairs because they were taking them as is, if you will. Buyers are now requesting repairs in the Binzer. And the challenge that's happening is contractors are not available. Supply chain issues, can't get the parts. The home warranty company can't even get the parts. So now you're coming on a 30-day closing and you've got a roofer who needs to do some roof work, but that roofer is 6 to 8 weeks out and getting that work done. And we all know if it's not a cash transaction, credits can be a challenge because the lenders are not excited about doing any kind of holdbacks. And so my point of all of this is that we need to start having good conversations with our clients now as we're entering these transactions, that if there are repairs of that nature, that we have realistic expectations and we work out a solution prior to coming down to 3 days before closing and doing a walkthrough and finding out that roof isn't going to be done for another 3 weeks. And what are we going to do now? So I just encourage you to have really good conversations, address those things early, find out, prepare clients for what the alternatives might be, whether that's a credit up front or whatever it is, and just start thinking about those things now, because I think that's going to get a lot worse here very shortly. So those are my things. The last thing is we did have some questions and we are over, but I do have one that I wanted to get out as a last minute here. And that is, we're trying to get some better engagement. Everybody's scattered. We have a lot of things coming at us, a lot of noise in our worlds right now, because everything's online and easy. So we want to get back to doing some masterminds. And what we have is, if we could get everybody to take a second here and just answer this question: if you will commit to attending a monthly mastermind meeting every month where you come in person or attend, that we can get some really good information flowing and ideas and what's working, what's not working, and all of these things that get addressed in those. If you guys could just answer this for me now. And can you all see this on your screens? Not yet. Oh, there it is. Can you see that now? So if you guys can answer that for me, we will reach out and get you guys on a list if that's something you're interested in. Watch my broker blasts, you guys. I get questions every week that I will say, did you watch my broker blast last Friday? Because I just talked about that. So I just encourage you guys, please watch those every Friday. I try to cover as current and relevant information as I can for you guys, little tidbits of things that I'm seeing or challenges that we're seeing, to try to hedge those off, and just updates on forms and different things. So please watch those every Friday and take the time to do that. They're in that What's Happening email every week for you. Otherwise, any other last minute questions or anything anybody would like to know?
I'm driving, Shannon. This is Monique, but yes, hi, sweetie. I can attend a mastermind meeting.
You got it. I'll add you to the list.
All right. Thank you.
You're welcome. If anybody else wants to do that, feel free to email me after if you're in the same situation and not able to click on this poll here. Feel free to reach out after. And we had one last question. Do you send transcripts of the broker blast? Yes, they are in the email. They're transcribed right underneath them. And any links to any forms or anything I mentioned, or articles in some cases. All right. And do virtual. We will look at that for the folks that have virtual. Do me a favor. I'll download this chat so I can address the folks that are interested in doing a virtual mastermind. we'll make a note of that and follow up with you guys and see what we can work out with that as well.
Yeah, I think an important part about that with the mastermind too, folks, is as Shannon mentioned, we really want to get that good engagement, and the commitment is that you're actually going to be there, right? It's not that like half an hour before someone wants to, see a property. Well, like let them know you'll do it after the mastermind, right? So same thing with virtual is like, yeah, I think we're happy to have you participate, but it has to be participation, right? It needs to not be like, you're doing your workout and, you've got your phone sitting on the table next to you. We want you like plugged in and actually participating. But again, if that is something that you'll commit to doing, then we can certainly look at that option. Because again, we just want that interaction. We want to get all the amazing resources that we've got inside all of our brains together. That's the point.
Yes, thank you. And thank you, Michael and Lisa. I appreciate you guys so much. Thank you guys. Thank you, everybody.
Back at y'all.
Thanks, Shannon.
All right.
Thanks,
guys.
bye.
Take care. Have a great week.
Thank you, everyone. Take care.
Bye-bye.